Hello and welcome from Trend Signal for our review of the data and events the week beginning the 4th of August. Just a quick review of markets last week before we get into the data and events expected this week. Tough week for markets in general, certainly equity markets, which fell sharply in the last 2 days of the week last week, prompted by surprisingly good GDP data. The first reading of the second quarter GDP data came in at plus 4%. So that's an increase of 4% in the value of goods and services produced in the US, which came on the back of the vortex-induced contraction of 2.9% in the first quarter. And I think that's a heightened concerns and worries that the Fed may look to tighten sooner rather than later. I say sooner, still not this year, but it increases the chances of a rate rise. And in fact, the FOMC, the Monetary Policy Committee, the rate setting committee of the Federal Reserve, had a dissenter in its ranks. So there's one member from the Philadelphia Fed who has voted for a rate rise there. So that really focused attention of traders, and I think there's a bit of letting off of steam as well, which resulted in quite a sharp move. Certainly in the US, the S&P was down 53 points, 2.7%. The Dow 467, 2.75%. Closer to home, not so bad in the UK. The FTSE, that was off 112 points, about 1.7%. But the DAX, very sensitive to events in East Ukraine and the sanctions imposed by the West, certainly the Eurozone, on Russia. That resulted in a 427-point fall on the week of the DAX, which is just short of 4.5%, so quite a move. Dollar continued its rally last week, although it definitely fell from its best levels, especially following the non-farm payroll on Friday, which was rather underwhelming. The US creating fewer jobs than expected, 209,000 versus 231,000. And the employment rate actually ticked up, the unemployment rate rising to 6.2 from 6.1%. Other than that, there was some fairly good consumer confidence data in the US, although in Europe we had the headline inflation dipping further to an alarming 0.4%, although the core reading, excluding food and energy, remained steady at plus 0.8%. So let's have a look at the data coming out this week. We've got rate decisions in Australia, UK, Eurozone and Japan, and we've got a number of readings on the services sector in the Eurozone, UK and US. Obviously the services sector a lot more important than the manufacturing sector these days, certainly in terms of the number of people it employs compared to, for example, 30 years ago. So let's have a look at these key events. The Aussie rate decision is really the first one on Monday night, Tuesday morning. The Reserve Bank of Australia is not expected to move on rates at all. It's very unlikely that they're going to step in again with any measures, so no change there. We have our services PMI on Tuesday in the UK. Again, another strong number expected, 58.1. Remember, anything greater than 50 is in expansionary mode, so the services sector is doing particularly well, as indeed the US's services sector, which curiously enough is referred to as the non-manufacturing sector, but their PMI is expected to come out at 56.6, which actually was after a slight dip the previous month, but certainly remaining quite buoyant there. Wednesday we have some manufacturing data in the UK again, plus 0.7%, which is a rebound from the previous month. We have the trade balance in the US, which is well, maintaining its same level as the previous month. 44.2 billion is what is expected there. And then really the next major event is the key event of the week, which is the interest rate announcements from both the Monetary Policy Committee of our own Bank of England, rate setting committee of our Bank of England here in the UK, and also the ECB on the Eurozone. The UK announcement, we're expected to obviously keep rates unchanged, but there is rumours of a couple of dissenters in the pack from the Monetary Policy Committee, so it may not be 9-0. You may have two dissenters, which would mean 2 voting for a rate rise and 7 not. But nevertheless, we do not see any chance of a rate rise. But the fact that there are potentially a couple of dissenters suggests that rates there is pressure on rates to rise sooner rather than later there. Well, totally different story in the Eurozone. The official announcement at 1:45 on Thursday, we're not expecting any cut, I should say, in interest rates there that were cut a couple of months ago to 0.15% from 0.25%. So don't expect too much from the press conference either at 1:30. And we are in the sort of summer doldrums, as it were, with a lot of people away, but no change there as well. And then we have the Japanese Bank of Japan, the BOJ, with the announcement on rates there as well. Again, in common with the other central banks' announcement on rates, we're not expecting any change in rates from the Bank of Japan, although there may be pressure on Bank of Japan to adopt further stimulus, but for now they're definitely on hold. That's it for the rest of the week. Equity markets look to be stabilizing on Monday morning, but from the opening they have certainly fallen, with the DAX still looking very much the weaker of the main international markets. More to follow on Thursday morning. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.